Going on, guys? This is King Wabi from Because Bitcoin. We're here joined by special guest, the one and only, the man, the myth, the legend, Mr. Tone Vays. And we're also joined by the rest of the speaker panel. We're joined by Max, Ed, Snorlax, and the most massive man in our team, Big Tuck, Big Country Hagrid, who still owes us a 225-pound bench press AMRAP vid. So we'll get into the meat of that. But for now, guys, we want to kind of go over, more broader markets. Typically, we focus on crypto. But today, given that we're about 6 to 7 days out from the next FOMC meeting, currently the market is pricing in over 80% of the Fed raising rates. And they're pricing in a pause and some cuts going into Q4, Q1, right? Q1 of 2024. So what does that mean for financial assets, right? We got the S&P and the NASDAQ pressing against all-time highs about 3 to 4%. So what does that mean for crypto, right? Will crypto catch up? This is why we have the man himself, Tone, here on the show. Tone, what's going on for the Bitcoin price, man? Tell us what's going on. Do you have any charts to show us, man? Any analytics? The people want to hear from you.
What's up, King? Thanks for getting me on the stream. I didn't even do mine today, so this is great. Hopefully a bunch of my viewers of my YouTube channel will jump on. Yeah, the markets have been super interesting overall. Definitely a crazy environment. 225 bench is pretty good. I don't think I've ever been able to do that. It's like 2 plates on each side, right? I was in the best shape of my life the older I got, because I finally understood nutrition and diets, and man, everything they tell you is just wrong, like with finance, everything you hear on TV and stuff. But so the S&P 500, I've been a major bull of the traditional stock markets, S&P 500, NASDAQ, everything. I've been a bull since the end of last year, and I continue to be a bull. I think the stock market is going to go to a new all-time high. Is it going to happen this year? Unlikely. We've gone up so far so fast in the stock market that it needs a bit of a pullback. I'm not expecting a new all-time high this year. I wouldn't be surprised if there is one, but I am expecting a new all-time high next year, which is going to be interesting in regards to the election if the stock market is at a new all-time high. But we also had massive inflation in the last few years, and inflation helps the stock market. Lots of markets to unpack here. I think that the Bitcoin and the traditional stock market are generally somewhat correlated. As the stock market rises, so does Bitcoin. I think Bitcoin greatly benefited from the rise of the stock market for the last 12, 15 years. And we've seen this massive bull market in Bitcoin. Yes, it's down 50% from its all-time high, but we've all here been in Bitcoin long enough, and we know that it can go to a new all-time high within 3 months. Even currently being down 50%, we've seen it before. We're going to see it again. So on the stock market, I'm bullish. The biggest problem in global financial assets is government debt. And the interest rate, which you also mentioned, the Fed funds rate, I expected a Fed funds rate to go up all year long. No cut in rates. I'm still sticking to that. They paused the rate increase last meeting. The next meeting is coming up in about 10 days. And I believe they are going to raise the interest rate by 25 basis points because they paused it last time. Do they need to raise it 25 basis points? Not really. They don't need to, but I think they will. Powell is still scared of inflation, but I don't even think it's that. I think that the Federal Reserve just wants to teach the Treasury Department and the government a lesson that they need to stop printing and borrowing so much money. The message is not getting through. Janet Yellen was able to get her wish of not even having a debt ceiling, and they just issued a shit ton of bonds. I don't know if you guys watched my show yesterday, but I did this deep dive into what will cause the inevitable collapse of the United States, and it's going to be the amount of interest the government pays on its cumulative national debt. Everyone throws these trillion-dollar numbers around. Every year, the government is in a trillion-dollar deficit, and that means that you get X amount of money in revenue, which is taxes. You spend Y amount of money in expenses, and the difference between the two is either a surplus or a deficit. There's been maybe 3 years of surplus in the last 25 years. That happened at the height of the dot-com bubble. And of course, that money was not used on anything useful. And all other years, we run a deficit. And last year, the deficit was over $1 trillion. The year before was more than that because of the COVID bailouts. This year, the deficit is going to be over $1 trillion. And next year is an election year. And it's going to be probably a few trillion as well because, they got to get reelected. So the spigot is open on money printing. And all this debt has now accumulated up to $32.5 trillion of federal debt. And there's interest on that. It's not a zero-free debt. And this interest is cumulative. And last year, the government paid $475 billion in interest payments alone. But it's only interest payments. They never pay back the principal. It's not like your house. Like imagine you took out a loan on your house and you only paid the interest. Meanwhile, you're taking out more and more money. So the interest payment gets higher and higher. You never pay the principal, right? You're only adding to the principal. And now you have a bigger principal. You have no intention of paying that, but you only need to pay the interest. And the interest payment this year is going to be probably close to $550 billion. And I'm expecting that interest payment alone to be upwards of $1 trillion within the next 2 to 3 years. And the reason why this interest payment is going up, scaling, like doubling or going up exponentially, is because Powell has started to raise the interest rate. And this is, for me, the most fascinating development in American finance and economics and globally, is the rise in interest rates, creating this huge problem for the federal government and how they're going to pay the interest on $32 billion in debt. All right. I think I've said enough for now. I'll leave it here. Go ahead and throw questions.
Let me ask you a question on that. I very much so appreciate the parallel that you gave. And I've heard one similar, not with a house, and I actually like yours better. I've heard it about like a credit card, right? It's like, imagine, you were doing that with a credit card. You just kept making like the minimum payments and the principal and interest would just continually compound. It's really kind of it's a dumpster fire and a disaster. But my question for you would be, it seems like there's really two paths to settling the national debt. As it currently sits, it's unlikely that we'll be able to afford to basically cover the debt service for the national debt. So my question is, do they cut interest rates to resolve the issue, or do they print more money in order to cover the national debt, compounding the principal amount even further?
Yes.
Yes to both.
Yeah. The answer is they want to do both. They want to print more money and they want to devalue the money. But at the same time, they're scared of inflation, right? Like, oh, whoa, we want to devalue the money, but not this fast, right? We want to devalue the money, but we don't want the average person on the street to notice the devaluation of their money. Which is a great idea. Let's see how they can pull that off. So, and yes, they will need some kind of a catastrophe to crash the rate. The problem is the current Federal Reserve is not playing ball with the administration. The way it usually works is the head of the Federal Reserve gets nominated by the president, and the current president doesn't even know what day it is. So someone gets to nominate, people that the president's supposed to nominate, right? So, and because the current administration decided to retain Jerome Powell, like when Jerome Powell was initially nominated, he kind of has to play ball with the administration that nominated him. Otherwise, he wouldn't have gotten nominated if he wasn't on par. And but once you get prolonged by a different administration, you don't have loyalties to that administration anymore. So the moment Jerome Powell got renominated to stay the head of the Federal Reserve, he can now do the right thing. And this is the problem, right? This is why whenever a new administration becomes the boss, they try to fire as many disloyal people as they can and replace them with as many loyal people as they can. The problem for Trump is he would have had to fire everyone, and that would have looked bad. So he only fired half the people, and the other half the people totally screwed him up, and here we are. So if he gets back in there, I'm sure he's going to fire everyone, like everyone. It's going to be hilarious if that happens. Anyway, so he's not playing ball with the current government. So there's no way he's going to lower the rate because the rate should have never been that low for that long to begin with. It was like mistakes of the prior Fed governors, and Janet Yellen probably is the worst of them all, and she's now in the Treasury. So she certainly plays ball with the current administration. And he is going to be replaced by the next administration. The next time he's up, he's going to be replaced, and he will be replaced by someone that's going to be loyal to the administration. Now, I don't know which administration is going to be in power. Is it going to be the current one? Is it going to be another Democrat? Is it going to be another Republican? I have no idea. A different Republican. Like I have absolutely no idea, right? But whoever the next Fed chair is, he's going to play ball with the next administration. And so the next Fed chair will be lowering rates because otherwise the US will be defaulting on their obligations of paying the interest. Like at least when you make that minimum credit card payment, even a fraction of that credit card payment still goes towards principal. The US government's not even doing that. So it's worse. Though the interest rate on your credit card is higher. At least the interest rate here is lower. But the interest rate is really a matter of the free market. The free market decides any interest rate. Like right now, the world believes that the U.S. Has a 5% risk on their debts. Different countries, they have to pay 10, 15% of their debts. We'll see where it goes, but this does not look well for the U.S. and its future bills. And most of the money owed in the federal debt is actually owed to the American citizens themselves. And American citizens have a lot of guns. So if America defaults on their own people, that's not going to be good.
Tone, man, I actually want to throw a controversial take your way. So we've covered, a bit of, what the government's doing and all that stuff, the Fed, and how, the next Fed chair typically is going to comply, right? That's the trend that we've seen. So, the last cycle we saw the Doge phenomena, right? Now, I'm of the belief that Doge has onboarded more people into crypto and Bitcoin more than anything else, right? And yeah, we saw Pepe this year, and that was fun. That was, our community played that, and it was all fun and games, right? But there wasn't that retention value where you saw Bitcoin then go on to, increase by 50, 60%. Because with Doge, yeah, it pumped like 10x in a week, but the after effect of that was Bitcoin went on to go from like 28 to 41K, right? If you guys remember that in January of 21. And so, the cycle before that, we saw Ethereum, right? As you know, once the ICO started, Ethereum went from like, I think it was like just under $1 to $25. Then it got cut by 70%. And then in 2017, it just went on to go parabolically when every single Discord and Telegram community was in like 100 different ICO pools, right? And of course, that trickled into Bitcoin and all that stuff. So my next question to you is, what's going to be that next catalyst that onboards more people, not only to Bitcoin, but into crypto as a whole, right? Do you believe that it's going to be, more public companies coming in to adding Bitcoin and ETH onto their balance sheet? Do you believe it's going to be, more nations coming in, like what we saw with El Salvador do pretty much near the top of the bull run? Would love to know your thoughts on that. And also, your thoughts on what occurred this year with Pepe compared to Dogecoin. Okay.
What do I think? Okay. Okay, so let's start with you crazy. The Doge did not onboard anyone. Let's start there. So the Doge pump was basically the result of Elon Musk. And the only people that rushed into Doge and pump the price are people that were already in the crypto space to begin with. There is nobody out there that I know of that's going to go, oh, wow, I need to learn about this crypto thing so I can buy Doge. And then after it started to crash, that same person said, well, I now love crypto. Let me convert this to something else like Bitcoin or something else useful. So I actually don't think it onboarded anyone. It probably did as much damage where people say, well, I was going to get into Bitcoin, but if these people are this stupid and they're going to pump Doge, then maybe I should wait a little more. So I'm going to take the opposite side of that. I don't think Pepe did anything either. Again, this is all stuff within the crypto community where people are jumping on the bandwagon because something is pumping and they're jumping on it to make money, and then they're pretending on social media that they actually believe in this stuff, but all they're doing is just trying to pump it up a little more. They think that their 1,000 followers will help pump it a little more, and they can get out with a profit into Bitcoin or into Tether. Tether is still ridiculously popular. As long as Bitcoin is down 50%, a lot of people are going to hold Tether. Once Bitcoin is at a new all-time high, you're going to see people dumping their Tether for Bitcoin because they're going to see the market. This is the same thing with GBTC discount sitting at 25% below par. And that's just because people aren't confident in buying Bitcoin. The moment Bitcoin starts pumping to new all-time highs, people are going to buy Bitcoin in all different forms, including GBTC. And I expect that discount to go away and go back to par and maybe even positive unless the Bitcoin ETF is out. Bitcoin ETF is out. A lot of people are going to be more comfortable with a Bitcoin spot ETF, even though there isn't much difference between a Bitcoin spot ETF and the current GBTC. They're both fully backed by Bitcoin. The difference with GBTC is that the Bitcoin sitting in GBTC has zero mechanism of being sold back into the market. And if that Bitcoin sitting behind GBTC was sold into the market, it would obviously drop the price of spot Bitcoin. Now, also the company behind it doesn't want to sell that Bitcoin into the market because they profit from that Bitcoin sitting in custody. Now, with Bitcoin ETF, they will take Bitcoin off the market when Bitcoin's pumping, but they're going to be dumping Bitcoin on the market when Bitcoin is dropping. So it's going to net itself out. So for me still, to this day, my very first use case for Bitcoin, and I'm wearing it on my shirt, it's called unconfiscatable. Bitcoin is the first unconfiscatable asset in human history. Bitcoin cannot block your bank account. They can't confiscate your money. Whether you are a Canadian trucker or a Canadian $20 donor to a trucker, your money in a bank could be frozen or confiscated. Or whether you are the biggest country by landmass in the world, Russia, having your money seized and frozen at SWIFT and the central bank. So it doesn't matter whether you are, like I said, a person with $1,000 or a person with, $1 billion. The government has access to stop and freeze your money, and Bitcoin can't do that. So unconfiscatability remains as Bitcoin's #1 asset. And the more videos like Nigel Farage come out, I don't know if you guys saw that, when he, like a British government parliament member, former parliament member, got his bank account not only frozen, like closed, and he couldn't find banking, right? This is what's going to drive Bitcoin. So for me, when I started doing my presentations, why Bitcoin is such an amazing asset and why it has no ceiling and why it's going to keep going up, my two biggest drivers into that was obviously the freezing and seizing of your bank account, the breakup of the European common currency, which I still think is coming, and the elimination of cash. This fight by the governments to create CBDCs, the concept of CBDCs didn't even exist back then, but the idea was still there. I had it in my presentation going back to 2015 that the governments want to eliminate cash. I provided all kinds of reasons as to why. The reasons are obvious as to why the government wants to eliminate cash. Most of them, the biggest one being taxation. And that's going to drive people into Bitcoin. These are still #1, 2, and 3 reasons. After that, institutional adoption, country adoption, like El Salvador, like BlackRock. These are all secondary factors. And they, of course, help drive price of Bitcoin. corporate adoption, like Michael Saylor putting the funds of their company into Bitcoin. But again, it's one guy, it's one holder. He's a large holder, but it doesn't compare to, let's say, 50 million Europeans realizing that they have like a 1 week window to move their euros into Bitcoin before it becomes drachmas and liras and whatever other currencies that are going to devalue immediately. People in Argentina are finding this out. I'm surprised the whole country isn't using Bitcoin. People in Turkey are finding out. Again, surprised the whole country is not using Bitcoin. So these are the factors as they move through a system. Now, today, there's a slightly other use case that's becoming a little more useful, which is remittance. I used to make fun of remittance in 2015 and 16 and 17, and now it's a little more realistic. It's realistic because the current technology is a lot better than 8-9 years ago. It's a lot easier to work online. It's a lot easier to find your graphic designer, your video editor, somewhere in Africa, somewhere in India. You want to pay that person. A lot easier to just for everyone to start using Bitcoin, paying in Bitcoin. Eventually, Bitcoin was going to remove the word remittance from the dictionary. That's starting to slowly come about. And I do think once Bitcoin goes to a new all-time high, what El Salvador did is going to spread through that region a little bit more. So hopefully that's coming sooner than later.
Hey, Tone, what is the incentive for nation states to adopt Bitcoin? Because, I mean, obviously one of the main assets or perks to being in control of the money supply is just that. If you control your currency, your national or your domestic currency, you control everything. Why would they take away their ability to print and manipulate their own currencies and adopt something like Bitcoin?
That's a great question. And the answer to that question is we have 180 countries in the world. And not every single president of every single country is an evil, dictator seeking more power. So occasionally, we do have people like Bukele. Occasionally, we do have people rise to power that actually want to do good things for the citizens of those countries. Now, in the last, I don't want to get your channel banned, but in the last, 50, 60 years, most of these presidents have been eliminated by a country I don't want to name through all kinds of means, either by colored revolutions or in other ways. But eventually, these breakthroughs do happen. And as more and more people move to El Salvador, El Salvador might be the only country where former people that have left El Salvador are thinking of coming back to their home country. That doesn't happen in Latin America. Very few, once people leave these Latin American countries to the West, they don't really want to come back, but people are actually looking to come back. So as the situation in El Salvador greatly improves economically, socially, other countries may end up with a leader that actually wants to do good for their country instead of looking out for themselves first. So I do think that can happen. It's interesting. Again, I'm a big Trump supporter. Not that Trump is a great human being, but unlike almost every other president that the United States have had, Trump kind of cared about the American people more than the global collective of the World Economic Forum and their vision. And that's what we have otherwise. And you do get a president that puts the people of their own country first. This is very rare in Europe as well. Europe has, the president of Hungary is like that. He cares about his people a lot more than the global collective. Meanwhile, presidents of, Canada, France, Germany, they care about the global collective more than they care about the citizens of their own country, right? So that's what you're looking for. And just because you have a leader that cares about the people of your country more than the global collective, the socialist collective, it doesn't mean that that person wants to go as far as giving them financial freedom with a currency they don't control. That's a big stretch. Trump will never accept Bitcoin. He's not a fan of Bitcoin. I'm still skeptical on RFK, whether he's really a fan of Bitcoin or not.
Mm-hmm.
I actually think that what he recently announced, that he was gonna use Bitcoin to back the the U.S. currency. I haven't read into the articles. I didn't read it. I just saw the headlines, and I'm like, that's dangerous. I don't think he should have done that. Bitcoiners are still a very small fraction of the people. We don't have Bitcoiners don't have the financial means. We don't have the big enough movement. It's not a big enough movement to elect a president, right? Or to unelect a president. It's just not big enough. But the fear that this would strike in those that have the power to elect a president or take a president down is going to be huge. So I think this is a dangerous move. But again, I was also a little wrong on El Salvador. I thought that El Salvador announcing what they did and pushing Bitcoin as a legal tender and getting everyone to start using it in a country like that was also very risky and a bit dangerous. I believe I was probably wrong on that. I would have rather preferred El Salvador simply use Bitcoin in their treasury to help back the country, right? I wasn't on board with pushing Bitcoin onto the public, but if the president of that country wanted to have more security for their country, they would, start storing Bitcoin as a country's wealth asset for the country, instead of holding it by other means, like buying U.S. government bonds, for example.
Yeah.
But it looks like it's kind of working out, but Bitcoin still needs to go up. So again, this is it's a little risky, and hopefully more people come to power that care about their people to the point where they want to do this, because this does take control away from the government. But that's how America was founded. America was founded on this kind of freedom, and it has worked for the last 200 years. But we're seeing the cracks in this. And I personally don't see how America survives as a single nation for another decade. I have made many plans to diversify myself from the risk of the United States splitting. This is why I spend most of my time outside of America these days. The fallout's going to be rough, but a lot of people don't see it coming. And if I'm wrong, I'm wrong. But I definitely made several steps to remove myself from that risk.
It's smart. We actually, funny enough, we had Plan B Passport on a Twitter space and had a really interesting discussion with them, sort of about the inherent risk of not having a backup plan, which sounds like you definitely have. And one thing I'd like to comment on quick, a lot of Bitcoiners might not like me for saying this, is I don't necessarily think that Bitcoin being legal tender and Bitcoin being a currency used to transact is the best use case of Bitcoin. I actually would prefer to not spend my Bitcoin. I would prefer for my Bitcoin to just sit there and store my wealth over X amount of years. I think potentially the win-win scenario for a government to actually, we'll just say, I think it was your words, there are some politicians out there that actually want to do the right thing, and they get into politics and public policy for the right reasons. I think that maybe a good middle ground, still enabling them to control their own currency, and dictate, the flows of their domestic currency, would be to offer some additional tax incentives within their jurisdiction that are Bitcoin friendly. I mean, for example, if they could somehow create something comparable to like the 1031 exchange, but for Bitcoin, where you can defer your capital gains tax if you want to transact in Bitcoin or swap into another asset within that country. So imagine if, there was a country in Europe that said, hey, Tone, you can come over here with your Bitcoin, and you could sell as much Bitcoin as you want, as long as you swap into like real estate within our country, and you don't have to pay any taxes or anything like that. I imagine there's probably a common ground which Bitcoin can become a staple asset for a lot of these countries, like you had mentioned, maybe holding them on their balance sheet rather than T-bills or other governments' debt. And just formulate tax code around it, which incentivizes economic growth and more, wealth basically entering their country. So I don't know. I mean, look, a lot of Bitcoiners, they dream of this scenario of hyper Bitcoinization. And, truthfully, I think that's sort of like the libertarian pipe dream. And I just can't imagine a scenario without some form of was without some form of, regulatory body surrounding, any nation state, because it's like, what are you going to do? Like take your Bitcoin and like go barter like you're at some flea market, hey, I'd like to buy this car. I'll give you, I'll pay you in this, variable, volatile asset. So I don't know. It's some people, they dream of spending it replacing the dollar. I think the dollar can exist perfectly in its crappy state where they just continue to inflate away all your purchasing power. And I think Bitcoin might actually work better as long as it's denominated in a worthless fiat currency that continually is being inflated in perpetuity, and your purchasing power is effectively gone. I just don't know how Bitcoin necessarily works if it's not being denominated in a fiat currency. I don't know if we want that.
Yeah, it's I agree with that. I basically had the same view on Bitcoin for a while, but as the price of Bitcoin rises, the view starts to shift, right? So I would say 98% agree with that 3-4 years ago. Right now, I agree with that to maybe the tune of 85%. And when Bitcoin is consistently over 100K, I'm going to agree with that statement that maybe 70 or 60% clip, because as the price of Bitcoin rises, smaller and smaller items become a lot less volatile in terms of Bitcoins. So this is why, yeah, buying a car with Bitcoin is probably a bit silly because of the fluctuations, but buying smaller items like, I don't know, a movie theater ticket is really not a big deal. And as technology evolves, it becomes easier and easier to use micropayments of Bitcoin, which is the Lightning Network. I don't really use the Lightning Network all that much. I'm still in your boat, Max. But in general, you can start to use Bitcoin for smaller and smaller payments. And then those that are accepting smaller and smaller payments are doing it in a way where, let's say you're selling a $10 item, and you're selling thousands of these $10 items. If you sell 100 of them in Bitcoin for these $10 items, it's a small amount of Bitcoin that you're just going to hold on to, right? So you can create these like additional holders. It's like, oh yeah, I don't have to sell it, right? So my problem is people buying things with Bitcoin, large ticket items. But when you buy a large ticket item, an expensive item, the seller to you of that item is probably selling that Bitcoin, and it makes absolutely no sense, right? So where I don't agree is if I am paying in Bitcoin, and I know with high probability or high certainty the person I'm paying in Bitcoin plans to hold that Bitcoin, then great, right? But if I know with certainty that that person is just going to sell that Bitcoin and take the cash, there's no way I would pay in Bitcoin, right? So it does start to help create this circular economy. And also, if no one is spending their Bitcoin, then it's kind of useless, right? So people do have to spend it as their wealth increases. But the ratio is slowly moving. And eventually, when the US dollar collapses, probably in about a decade, I still think the US dollar has lots of strength to go. I still think it will rise against Western currencies. I don't know what's going to replace it. I'm not very optimistic on this BRICS gold-backed thing. I don't know if that's going to happen. Again, why would these countries give up their own sovereignty over their currency? And we're not talking a little country like El Salvador, which no one has heard of until 3 years ago. A country like Russia or China or Brazil. Like, why would they give up their currency? These are major countries. I don't think they're going to want to do that. Neither will India. I don't know what's going to be the medium of exchange, but if anything, I have no idea what's coming. Like, we can all speculate on what's coming, but we really don't know. And I do think there is a use case of Bitcoin being a medium of exchange, but we have to put it in the right bucket. It's not the primary use case, and the smaller value the item, the more useful it is in a way. But you also provided a good example of you can get a lot of wealth into your country by allowing people to, convert their Bitcoin tax-free. But the problem is on the exiting country, not on the, the country where Bitcoin's going. Like, every country wants money to come in. Countries don't want money to get out. So the legal tender laws are actually interesting. Well, El Salvador had the US dollar as a legal tender, and now they added Bitcoin as a legal tender. But I'm in Panama, and Panama does not have legal tender laws at all. From my understanding of their laws on money, Panama is a US dollar country just like El Salvador. But unlike El Salvador, which has a law that says we use the US dollar as a legal tender, Panama has a law that says our country does not have legal tender law. So technically, you can use any currency in Panama, but everyone just happens to use the US dollar. Now, what happens if the US dollar falters and you have a law that says we are not allowed to force any money on you? What do people use? We don't know. Maybe they will change the law and a money law will come in. Maybe they will create their own money, or maybe people will just start using whatever money they choose. And the later the US dollar collapses, the stronger Bitcoin will be, the more comfortable people will be with it. And I can definitely see Panama becoming another Bitcoin country for saving and spending.
Does the panel think that, the dollar collapsing would be beneficial for Bitcoin? Because I kind of view that as a Trojan horse event, similar to, Q4 of 2021, when a lot of people were saying, oh, inflation is good for Bitcoin. You can store your wealth in Bitcoin. It's an inflation bet, right? And now we're seeing sort of the antithesis for Bitcoin and crypto come to fruition, which is, oh my goodness, Fidelity is coming in. Let me buy my ETH in there. Let me buy my Doge in there. Let me buy my Bitcoin in there. Let me buy my NFTs on the Charles Schwab exchange. Does the panel think, right? Rather, this is something for everybody to discuss. Does the panel think that the US dollar significantly getting weaker and weaker and collapsing, whatever the end game might be, is actually beneficial for Bitcoin, given that it's so heavily denominated against Bitcoin? So, question.
I don't personally. I don't know. I mean, look, I understand like one Bitcoin is one Bitcoin, right? If we could enter that paradigm and it became a universal standardization of currency, one Bitcoin is one Bitcoin, that can work as well. But I think it works better if it has something to bleed against. So maybe if it's not the US dollar, it could be the one world government CBDC or whatever replaces the dollar if it falls. But again, I don't think that the brightest future for Bitcoin, if we're talking about actually like growing your wealth and sort of being outside the conventional means of having your currency, sort of inflated away, I don't think that the best future for Bitcoin is the destruction of the biggest Ponzi that really makes Bitcoin, again, let me rephrase it. The fact that Bitcoin is denominated from the world's biggest, most dangerous Ponzi, for those that decide to hold their wealth in Bitcoin, it's a win-win, right? Like you could get paid in dollars and you convert it to Bitcoin, and over a 5-10 year period of time, you're going to exponentially increase your purchasing power. I think that's a perfect recipe. I don't think we need to change that. And there's no issue with spending my dollars or my fiat currency. I can send Venmo payments or Cash App or Apple Pay or transacting cash or a check or a wire. And it's not that efficient, but it's not that terrible either. Okay. There's nothing wrong with transacting in fiat. So if we're talking about creation of wealth and preservation of wealth and growing your wealth over a long period of time, one Bitcoin can't equal one Bitcoin. We need one Bitcoin to constantly appreciate against the dollar or whatever other Ponzi it's denominated in. So again,
I agree with you.
It's my own
Max.
opinion though.
Actually, I want to ask you, Tone, about this, because earlier you mentioned that the correlation between stocks and Bitcoin, right? Like when stocks typically go up, Bitcoin typically goes up, right? As we've seen in the past. So when you say like countries need to adopt Bitcoin as a transaction, but you're expecting U.S.'s economy to collapse in the next 10 years, are you referring to the transaction should be like 0.010001 Bitcoin as opposed to like 0.0001 is equated to this much in dollars? And at the same time, I also want to ask you, right now, Bitcoin, outside of the Lightning Network, which there's a whole controversy behind that, right? Even to like Bitcoin purists, they would argue that the Lightning Network isn't really blockchain. I think that's something that people have gone back and forth in. it's not really scalable. It's not really a scalable solution. That's why we struggle even with miners sometimes, especially during high times of like huge upsides and stuff. So I guess my question to you is, if stocks are correlated, but you expect Bitcoin, the US economy to collapse, then how is there going to be a mainstay for Bitcoin in a future economy? That makes sense.
Yeah, no, great question. Let me double back a little bit on the prior question, and and the way I'm going to answer it is there's multiple variables involved in, let's say, the U.S. dollar and the U.S. Economy collapsing. Right? It's a matter of how much time happens before the inevitable, and how quickly it happens. So, for example, if it happens next year and it happens suddenly, Bitcoin is going to have a huge problem. It's going to have a huge problem for multiple reasons. One of them is what, Edward, what you just said, the Lightning Network is not yet technologically scalable for any kind of mass adoption. Not yet. It probably needs another 5 years of additional development, additional, smart people keep coming up with better ideas to scale the Lightning Network. Also, comfort level. Bitcoin is now, 14 years old? It needs to be over 20 years old. Like, we really need people that don't know a world before Bitcoin, right? Like, I still remember a world before the internet, right? Anyone here on the stream? Snorlax, you look young. Do you remember a world before the internet?
I mean, I remember a world where, devices weren't integrated into our daily lives in the way that they are, but yeah, it's difficult to imagine a world without the internet. Yeah, it's been a long time.
Right. So if you watch sports,
to the ETH chart, guys, he lives and breathes the internet, man. This guy literally lives on chain, bro.
All right. Well, I still remember a world where I had to memorize phone numbers. Okay. So we need a world where people don't remember what it was like before Bitcoin existed, right? And at that point, there's no fear that Bitcoin is going to go away, that it's going to go to zero. And I'm guessing we need at least 5 more years for that. This is why a lot of things change with not this halving coming up, but the halving after that. Okay. I think we move on to a whole different world. By then, also, a lot of wealth would get moved over from the boomers. The boomers have maybe 10, 15 years at most. And then all that wealth gets transferred to the younger generation that's more accepting to the latest technology. And so one factor is time. Bitcoin just needs a little more time from not only better technological scaling, but also better acceptance. The other factor is how fast it's moving. A sudden collapse creates huge problems, right? Like, I remember before Bitcoin with the 2008 financial crisis, before Bitcoin even existed. And everyone was like, oh, gold, gold, gold. Everyone thought that the world would end with the financial crisis and gold's going to be it. Well, what happened in 2008 when the stocks fell 50%? Gold fell 33%. Why did gold crash 33%? It went up then after. But why did gold fall 33%? Well, because when the stock market crashes and the banks are going out of business and every single business is about to go out of business because they all of a sudden lost their credit ability to run their business, everyone is broke and you still got to put food on the table, and you're going to sell whatever you have, including your gold watch and your gold coins. And gold suddenly crashes because everyone has to sell it to feed their family. So if the crash is quick, no one has enough money to buy into Bitcoin, right? And that makes it hard for Bitcoin to go up in value. So the crash has to be more sudden. So for example, if the euro suddenly collapses, you don't have time to go to the bank and convert your euros into Bitcoin. And the next morning you wake up and your euros have been converted into, the Greek currency drachmas. And when you get them in the bank account, they have already devalued by 75%. So you're instantly 75% poorer. So you are now going to buy Bitcoin and you don't have a lot of wealth left. That's why the price of Bitcoin, it will be hard for it to go up if the crash and the breakup happens suddenly. You actually want it to be the boiling frog. You want it to happen slowly. You want people to have the ability to think and properly enter Bitcoin instead of rushing into Bitcoin and potentially getting scammed because they went to, a website that wasn't the .com, but it was like, .trade or something, right? So you want people to have the ability to rationally think about what they're doing. So if those two factors is how it happens, if the inevitable collapse happens in about 8 years, and everyone sees the writing on the wall as it's happening, that's incredible for Bitcoin. But if it happens very soon and tomorrow, then it's a problem. So that was the first part. Edward, sorry, can you just remind me on what was the other thing I was supposed to answer real quick?
I just touched base on the scalability issues and also the correlation between stocks. Yeah, stocks and Bitcoin.
The stocks, yes. So here's the thing. So even though I am very bearish on the future of the US government, I am actually still very bullish on the US stock market. And again, this factors in the future of technology. The future companies do not have to tie themselves to a jurisdiction. Now, again, this is good and bad, right? Potentially, 5 years from now, no company ever goes into an IPO stage on a regulated exchange. It's very possible that the future is every single company tokenizes, and it's a token, right? Like hopefully it's not on the Ethereum blockchain. Hopefully that goes away. So hopefully it's on the Bitcoin blockchain. But I think the future is what happens. Like if, let's say, America breaks up as a nation, is Apple suddenly going to go away as a company? No, of course not. Like Apple doesn't even build their cell phones in the United States. There's absolutely nothing that makes Apple an American company. It's a global company. There's nothing that forces Google to be an American company. It's a global company. So these companies can just be global. They can continue with their business. Like Netflix doesn't need a specific jurisdiction. They can all be virtual companies. Okay, and that's why I don't see a problem for the U.S. stock market. I see a problem for certain companies that are going completely woke, and I see them having problems, right? But as a company, the future, I don't know what the future of technology is. Perhaps there was a project back in 2014, 2013 called Color Coins, where, hey, what if a company takes one Bitcoin, breaks it down into 100 million Satoshis, and then each Satoshi is assigned a stock of that company. This is like similar, like people are sticking their ordinals onto a Satoshi right now. But this was all thought about like 10 years ago. These were all already intended projects for the Bitcoin blockchain. It just wasn't scalable back then. It's probably going to be scalable in the future. And now a company can go somewhat public using Bitcoin as the rails to trade the value of that company. Now, how would that work? I don't know. Maybe every company is going to have its own token. I think it's silly to have a token of the company representing the utility of that company. I think that is horrible economics. But hey, again, I don't control the world. And I'm also expecting this global policeman to go away. It is going to be the wildcat banking of the mid-1800s when Andrew Jackson eliminated the Federal Reserve Bank, the second Federal Reserve Bank in the United States. Andrew Jackson eliminated it, and it was actually a giant disaster. Once the Federal Reserve Bank of the US was eliminated, every bank had their own currency. So the United States at that time in the mid-1800s had like 20 different currencies in the country, and no one knew what was real and what was fake. It was the world of 1,000 shitcoins. And it created a big problem. It actually, the president created the Secret Service, whose job it was to deal with counterfeit money because there was just too much counterfeit money. Every bank started making their own. And it created a whole different set of problems. So I don't know what the future holds for how stocks are going to be denominated. Maybe they'll be denominated in Satoshis. Maybe it will be the token of every single company. But technologically, things are going to change. I have no idea how, but it's going to be crazy.
Yeah, hopefully there's a Dogecoin Netflix hybrid stock, man. Coin index, bro. I wonder what that would be like if crypto eventually, is brought on over where you can buy like some of these assets on traditional like exchanges. I wonder what sort of ETFs would be comprised of, what their names would be, right? Like Doggy Inu Index. And one thing that I was touching about, Tone, when I was mentioning how like, Doge onboarded users and all that stuff, this is coming from like my own perspective, like my own social circles, where people that were locked down and had no idea about finances, had no idea about stocks or cryptos or really anything in terms of investing, right? And then when Doge started its trend, and of course, as you said, Elon was talking about it and all those things, I feel like that movement was almost in a way like a once in a generation type of thing where the mass consciousness collectively of multiple generations were focused on one platform. And I feel like things like Twitter have really changed the way we do investing, where it's been almost gamified. Do you believe that really the introduction of cryptocurrencies as a whole has gamified the way we do investing? And I understand that, people like yourself that were really pioneers in the crypto space that got in, in 2011, 2013, 2012, you guys are a rare breed, but I feel like the ones that came in during, Ethereum in 2015 and beyond have sort of been introduced to this new way of investing where it's really, really fast and really gamified, right? When you go on things like Coinbase, when you go on things like, Robinhood, Webull, right? Brokerages like that, it's like this nice flashy UIX, this nice interface, these tutorials on what this stock is, what this token is. I wanted to know your thoughts on that. Do you believe?
So when you say the word gamified, I use the word crypto. It's gamified because who likes games? It's usually children and people that are young. And then some people don't grow out of it, and that's why you have 40-year-olds still playing, a bunch of video games. Look, I play video games sometimes too. It's usually done at my cabin where I have my old school Super Nintendo, and sometimes for like a 24-hour period, I feel like playing Street Fighter, right? But I wouldn't exactly call myself a gamer. I went to Japan the other day, and it was great going into these old cafes, sticking in the old Nintendo games, and playing those, right? But I stopped video gaming when I was about 20. Because I realized there was like, more important shit to do with your life. So when you say gamify, what crypto did was it allowed the 12-year-old to actually speculate in money, something that my generation was not able to do, right? So back in I'm not that old, but back in like the 80s, the only way you could trade stock is, through some kind of a broker. Like the broker had to call you. And then in the 90s, in the late 90s, it was suddenly accessible to everyone through E-Trade. E-Trade, Ameritrade. I don't know if you guys ever saw those old E-Trade baby commercials back in the late 90s. So suddenly, you didn't need to be old or like older or wealthy or be a professional to access the financial markets. You now can do it, but you still had to be 18, and you still needed, there were still some requirements. There was a jurisdictional requirement, like you had to be an American to trade American stocks. You had to be 18 years old, and you still had to have some money. Like no one's going to open you a bank account, a trading account with $1,000. Like Robinhood does it today, but back then E-Trade wasn't. I mean, they kind of did it. I remember my college buddy did like trade at penny stocks for $1,000, but it was like rare. What Bitcoin did, what the crypto industry did was it removed every barrier to entry, including a financial barrier, jurisdictional barrier, and age barrier. So the only people that really cared about, Elon pumping Dogecoin was like, the younger bunch. Well, like no 35-year-old got educated through Doge about the financial market. Like it did not happen. And so that's what it did. And is that good or bad? Eventually, people grow out of it. Like, eventually, people realize that these are shitcoins. Even if you got into it at 14, 15, by the time you get to 25, you're going to see 98, 99% of everything except maybe Ethereum would have lost you money had you held on to it. So either you had to learn how to actively trade and get out at the top, or you realize that this is all nonsense and I should just hold Bitcoin and focus on what I actually know how to do and not be a speculative trader. So again, it's a factor of time, and one more cycle, and no one's going to talk about Doge. No one's going to talk about Litecoin. These things are going away. The jury's still out on Ethereum, but all of this stuff is going to go away. And to one other point on traditional exchanges, we don't know if the traditional exchanges will exist in 10 years, right? It depends on which way the pendulum swings. Right now, a traditional exchange may still be able to buy a company like Kraken, maybe. But in another 5 years, if Kraken continues to grow, it's a company like Kraken that would be able to buy, say, the New York Stock Exchange. And then what happens when a crypto exchange buys a traditional exchange? Again, the tables will flip, which is why the government is not really happy. Now, same thing with Binance and FTX. Like, if FTX ran a legitimate business, they could have actually grown and grown and grown, and eventually could have been the biggest exchange in America, buying the NASDAQ and the New York Stock Exchange. But clearly, they were scammers. Now, what about Binance, right? Now, if Binance continues to grow and actually runs a legit business, which I question, but if they did, and the value of that token, which to me is an unlicensed, unregistered security, but the SEC is too incompetent to do anything about it, if Binance grew to a $3 trillion company, they would just take over the traditional exchanges, right? So I hope that doesn't happen, because I personally am not a fan of Binance. If any company does it, I would rather it be Kraken than Binance. But you don't know where the future holds. I also don't like Coinbase, so I hope it's not Coinbase. But again, I don't know what the future holds.
So if
Tommy
you don't
and
believe
Tucker-
that exchanges should be around, or you don't think exchanges will be around, I'm sorry, in the next coming years, then how will the average Joe get access to Bitcoin? I mean, right now that's kind of like the argument that people are saying, that the reason why I think ETFs should be implemented, right? I'm not saying that, but people are saying that, is because it gives Bitcoin access to the general public, right? They can now start investing their 401ks, retirement plans onto Bitcoin through a custodian that will hold spot. So if those mediums go away, then how will the average person get access to that? I mean, I've been in crypto since 2016, yet all of my legs are being cut out under me, because it's hard for me to even buy crypto now than it was even 6 years ago through these regulatory mediums. But then you're turning around saying that we should start registering unlicensed securities with crypto. So where do you what do you think about that?
Right. So there's several things to unpack there. So I don't see how a Bitcoin ETF gives people actual, access to Bitcoin. Like, it doesn't, right? It allows people to speculate on the price of Bitcoin, but anyone buying into that ETF is still thinking in terms of dollars. They just want more dollars. They don't care that Bitcoin exists. It's just another tool to profit from. Now, I believe it's a lot easier to acquire Bitcoin today than it was in years past, because more and more people have Bitcoin today. So more and more companies and places would accept Bitcoin as payment, and more people have Bitcoin, will be spending more and more Bitcoin. And again, it's a matter of jurisdiction. Go to El Salvador, you probably have no problem accessing Bitcoin, because people are paying with it left and right through Lightning, even for small items. You go to a place like Dubai, where it's super popular, Tether more so than Bitcoin. But again, and technological tools are coming. Eventually, you'll be able to just swap these things right on the Bitcoin blockchain as well. I think people should utilize things like the liquid sidechain, where there will be other swaps between assets. But I think as time passes, again, give it 5 more years, Bitcoin will spread around the world. More people will have it. And next time you go out to dinner, even people you never expected, they might be able to pay you in Bitcoin directly, right? Like, having these ETF tools, I think, slows down Bitcoin adoption, because instead of people actually holding the Bitcoin themselves and occasionally spending $100 of that Bitcoin on a dinner because the value of the Bitcoin has gone up in the last month. Now they're sitting on paper Bitcoin in their brokerage account, and they will not pay you that $100 next time you want to pay for their dinner on your credit card. So I think these kinds of financial tools actually slow down real Bitcoin adoption that would save the world out of this fiat insanity that is happening. But just slowing it down doesn't mean it's going to end. It'll still happen. It'll just be a little bit slower.
Yeah, I wanted to ask you about that actually, because, the topic of exchanges right now is obviously a very sensitive one, with where people, store their coins, where they, even store USD value within crypto. I wanted to ask you kind of to just kind of expand a little bit more on like what you think what the exchange system to buy Bitcoin looks like 5 to 10 years from now. And like, I know you already kind of touched on it already, but not just slowing down the adoption of Bitcoin, but do you think this kind of goes against a lot of what we love about Bitcoin, which, like you said, it's unconfiscatable, it's decentralized, it has all these properties that maybe storing a lot of coins through something like a Fidelity could discourage?
Look, I honestly believe 10 years from now, it's going to be incredibly easy getting Bitcoin, because 1 out of every 3 customers for whatever it is you do in business will have Bitcoin to pay for your product or service, or you can request it from an employer. If you are working, I mean, there has been a middleman. It's called Bitwage. I knew about this company since 2015 or 16, because I remember just chatting with the CEO back in New York at the New York Bitcoin Center. There's literally a company out there that would receive your paycheck from your employer, and they take your paycheck and they send you Bitcoin. They charge you like 1% or something like that on that conversion. So, and you don't have to do your whole paycheck. Like when you sign forms with your employer, they're like, how do you want to be paid? And you're like, well, I want 50% going to this bank account and 20% going to this other bank account. Oh, can I have 30% going to this other company? And just send the paycheck to them, and then you don't have to tell them what that company does, and then that company will, acquire Bitcoin for you and pay and send it to you. So there's plenty of middlemen that will still do it. There are ways. There are ways to get around it. And I think that 10 years from now, I don't want to give percentages here, but I think 10 years from now, the Bitcoin will be spread around the world so much that it will not be an issue. Like, people will just be using it.
Yeah, I think Klaus Schwab, despite him not really having the best reputation, he says that he predicts that a certain majority of GDP is going to be on the blockchain within the next couple of years. Tony, you said you wanted to share some charts with us. By the way, you had mentioned that you wanted to screen share a few things, and there's a nice like cloud right like above you. By the way, I'm not sure if that was intentional, but I know you said you wanted to share a few charts with us, so you can feel free to do that, man. But I kind of want to get back into price, right? Price and tickers. When it comes to the stock market, Tone, what tickers are you specifically looking at? Since I know you're pretty bullish on the equity markets at the moment, and also some price predictions for the end of the year for Bitcoin. Do you believe that this is going to be a halving where potentially we could run into the halving and be at, say, like 45, 50K? I kind of think that like Bitcoin has reached a fair value price, which is about like early 30s, late 20s, similar in 2018, 2019, where for the majority of those 2 years Bitcoin was hovering around like 65 to 8,500. So would love to know your thoughts on that as well, brother. What are we looking at here, man? The Brave Coin Liquid Index.
Yep. Well, that's just Bitcoin aggregate price going back to 2010. It's by a company called Brave New Coin. I actually helped build this index back in the day. So I still like to use it every now and then. So it just allows me to take the price back down to 2010. TradingView has built one of these indexes as well now. But back then, this was the only way to look at Bitcoin price. And if you wanted like a long history back to the early Mt. Gox days. So in the beginning of this year, I put out my long-term projections for Bitcoin, and I gave it two paths. Either we were going to rally this summer big time back to the all-time highs of 60K, and then pull into the halving, and crossing the halving around 35, or we were going to take a much slower path, still hit the halving at approximately 35, 35.40, then take another dip, and then make up for the slowness of price going up on the back end towards the end of 2025. So my predictions for the ultimate top of this bull market is in the $200,000 to $300,000 range for Bitcoin, sometime before the year 2026. So to me, this is an amazing time to accumulate Bitcoin. I think that the bull market has started, and this is the time to acquire as much as you can. There is all kinds of reasons for this. Historical, the halving is coming. Prices tend to go up after the halving. But I do think that you will have a chance to buy into Bitcoin between 30 and 40,000 for the rest of the year. And that's my long-term projection on it. I became an incredible bull of Bitcoin at $20,000, and this was back in March. And I made this chart of all the times I've been crazy bearish or crazy bullish on Bitcoin. I need to separate these into bullish and bearish differently. Like I haven't been wrong often on something like this. And right here, when we bounced off of 20,000, I said this is as bullish as I have ever been on Bitcoin at any given time, including the moment we crashed during COVID. Bitcoin was like 4 or 5K. I became incredibly bullish. I'm even more bullish here at this stage, just the way things worked out. I'll just say I'm incredibly bullish on Bitcoin. On a weekly scale, we're just consolidating. I think this is just a great time to accumulate over at these prices. I don't think we're ever going below 20 again. We'll be lucky if we go below 25 again. I just don't think it's worth it to wait in the stage. This chart shows my portfolio. My portfolio is currently 100% allocated into Bitcoin. And if later this week we do start to trade below 29,500, I will lower this allocation to maybe 80%. But I've been only in bullish allocations since the lows, even since before the lows. I've only been in bullish allocations, and it'll be a while before I switch to bearish allocations, probably at least 2 more years. And on a daily scale, I love this consolidation. It wouldn't be okay to see a dip down to 29 or 25 as long as it's quick and goes back up. If we dip to 28, into the 28 range, and immediately bounce above 29.5, I'm going to be incredibly bullish, thinking that we're going to break out. I think the only risk left is a pullback at around 34. And once we break that $40,000 range, I think it's off to the races to new all-time highs. Let's just say I'm pretty bullish on Bitcoin. I like the fact that GBTC discount is slowly trending towards zero as well. And the other thing that I'm really paying attention to is the oil markets and the continued depletion by our government of the Strategic Petroleum Reserve. I think the numbers came out. Let me see if the latest numbers come out. So I keep track of all like government data in my own spreadsheet. This is the government budget, the spending, everything. I did a big deep dive into how net interest payment is gonna be what takes down the United States by the end of this decade. I keep track of the oil reserve numbers in the Strategic Petroleum Reserve. The last number was on 7/7. I think the numbers just came out this morning. And they have been updated, and the government did not deplete the Strategic Oil Reserve. That is super interesting because they did not withdraw from the Strategic Oil Reserve at all. In fact, they managed to add 1,000 barrels, which is surprising. That explains what happened last week. And in the last week, you can see the price of oil has gone up. This is the data coming out on Friday. So this is the data for this time period right here, from Monday, right here, from Monday to Friday. And you can see on Friday, we dipped down a little bit, but you can see how the price of oil went up all of last week. And that explains the uprise, and we hit a new high since April. That's the daily chart. Here's the weekly chart. We hit a new high since April. And if we look at the numbers, this is great. I can't wait to do a stream on this. Back in April, if we go to April, April is when they started depleting the Strategic Petroleum Reserve. And today is the day this is the first week they did not take away. And you can see that the price has gone up back to this area over here in April, back to where it was in April. That's super, super interesting to me, back in, the mid to high 70s range. Need to dive deep into that. Natural gas, I'm bullish on as well. Gold, I'm bullish on as well. I do have my own indicators that told me that last week was a high probability of a reversal in the price of gold. I am bullish on the price of gold once again. I think it's going to go to new all-time highs. And of course, I am bullish on the stock market. Sorry, I said bearish. I've been bullish on the stock market since October, not only from my own personal indicators that gave me a green arrow right here, and there was a green arrow on a monthly scale as well. I was screaming that the markets are going to reverse in October. Back in September, it's all over my YouTube stream and on Spaces. And so far, so good. And I do think we are going higher. The correlation has not been working out the last couple of days between Bitcoin and the stock market, but I think Bitcoin will break out in due time. We can also talk about specific stocks or currencies. Bitfarms is one of my favorite Bitcoin mining stocks. I've been talking about it going into the lows of as well with the rebound here. I've been covering it a lot on the channel. And we can talk about other currencies or markets, whatever you guys want. So fire away.
Hut 8. It's another miner.
Are you a HUD 8 fan, Tone?
I'm not familiar with that one. What's the ticker?
It's just HUT, HUT.
Oh, HUT. Oh no, I do have it somewhere.
That's Tucker's ticker. That's what I'm going to nickname it now.
Not to be confused with Pizza Hut. We got a lot of cheese lovers here, so just want to give some disclaimers here. This is not
Tone, what is this? What's this indicator that you have? The big band that's green and red. That's a custom indicator of yours?
So that was not mine. That was from a friend of mine. It's called Alpha Numerics. He was on my show the other day. He also attends my financial summit. This gives me an ability to do a shameless plug. So Matt came to the last financial summit. I mean, him and I know each other for a little while. It's an event for traders and anyone else in finance and investing. And we share information on our trading strategies, not the secrets of them, but how we make money, basically. Matt was one of the presenters. He presented that indicator. Everyone pretty much loved it. I started using it in my charts as well. And this is an event where we talk our trading strategies. I started adding that indicator to my charts because I learned about it at the financial summit, and it's really, really good. Let me go back to HUT. So those interested, check out the financial summit. We have, it's a combination of health, wellness, and talking about investing and trading. We got lots of YouTube videos showing you what goes on at the event as well. Check out the website, check out our YouTube channel. We got testimonial videos, everything. It's super, super cool event. And yeah, so I'm not an expert on that indicator. I do understand it. Right here with these green diamonds, it indicated good opportunities to get into the stock. And we haven't had another green diamond in a while, so you're still holding it. The combination of having a green diamond and a green wave puts you basically 100% invested in the stock. It's still that way. It's different than my indicator. My indicator has these arrows with ones and twos after it. This is where I would take profit. On a green star, I would go back into the market. Here I would take profit. Here I would go back into the market. Now, when I go back into the market at the top of the candle, unlikely. Personally, I go in at the break of other critical candles. So I would have gotten long back into the market here, but maybe not, because there is also a red arrow with a C. These are all things that when a person purchases access to this indicator, you get an explanation of all these arrows. So this arrow with a C could have prevented me from jumping back in. Not to mention the 100% rise in the last few months. I also don't like to chase. But if you're blindly trading only a part of the indicator, yes, you go back in. I would probably still be long or taking my break-even stop loss. That's up to you. This weekly, this W right here is a problem. Actually, I would not have gotten on this green star because a higher level time frame, which is the weekly, would have told me that this is a selling opportunity and not a buying opportunity. Those people that are traders know that any signals on a weekly timescale are more important than signals on a daily timescale. So the difference is over here on a daily timescale, where I might be exiting on a red arrow, I am very comfortable entering on a green star because this is happening on June 28th. And on June 28th is this candle here. And I still have 3 candles before the weekly time frame is telling me to get out. On this candle on July 10th week, I have a weekly telling me to get out. So when my daily indicator on a daily time scale is telling me to get back in, but the weekly time scale is telling me to get out, I'm gonna trust the weekly time frame over the daily time frame. They need to align. So now I will wait for the weekly time frame to be bullish, and then I will try to time that trade within the daily time frame. Now, on alphanumerics, you would still be bullish because it's a very, very different indicator. They do complement each other, which is like why I now like having them both on the same time frame. I think this particular miner is a little bit overpriced. Look where we are from support. We did break the swing high here, but to me, this thing can easily pull back to the area where it broke out and where prior swing highs are. So to me, this has potential of dropping an additional 30%. And if I go over to Bitfarms, using the same methodology, it has the potential to drop 25% and not 33%. So it's a lot, not a lot, but it's somewhat closer. It's not as big of a difference as I thought it would be, but
And Tone, one quick question
this
for
one
you.
didn't run as high up and also topped on an MRI top.
One quick question for you on the topic of Bitcoin mining companies. Given the tight positive correlation between the spot Bitcoin price and then Bitcoin mining companies, if you think it's possible that 2 of these mining companies we looked at, BITF and HUT, have 25 to 30% pullbacks, what do you think that would imply for the spot price of Bitcoin?
Bitcoin down maybe to 28K. It doesn't take much. It's like gold miners. It's like gold goes up 2%, and then gold miners can move 15 to 20%. So it's not going to take much. A bit of a scare in the price of Bitcoin, and these things can drop. They did run quite a bit. I think it's not going to fall this far. I think a more realistic fall is down to $1.50 for Bitfarms and for HUT. A more realistic fall would be maybe to $3, $2.80, $2.90. That would be more realistic. I would like to pick them up on the cheap, but I don't think we'll be that lucky.
Yeah,
Yeah,
very
if you look at HUT on the monthly time frame, it's looking real similar to 2020, I believe. Let me see real quick.
Right. Like this is beautiful right here, right? Like here is my here is well my indicator. Let's stick to just MRI. MRI is telling me that there is a buying opportunity on a daily time scale. And then look at the W's right here, which means there was a buying opportunity on a weekly time scale back in January. And let's go over. Oh, wait. I'm way far. You can see right here on a weekly time scale, there was a beautiful buying opportunity. And in this week, there was a daily buy as well. Now, there was a daily buy back here, but back here, it didn't align with the weekly. So this is why I really like this indicator. On a monthly time scale, the buying opportunity came a bit early, could have gotten some people in trouble. This red star candle would have certainly made me bearish. And according to TA that I use, when would I get into the stock in a bullish way? I would get in off of this green star candle. And because this green star candle didn't end breaking the highs, for me personally, on a monthly scale, the TA that I like to trade with would have gotten me into that trade early June at a price of $2.35, had I been paying attention to this particular stock and looking to trade it. That would have been my buying opportunity. And over here, I would have been very, very bearish. I don't short stocks this cheap, but I would have been very, very bearish there.
So I had a question for you, and kind of as it relates to these momentum indicators, a lot of times what can appear as though momentum is when it's at its strongest, it's actually when you should be looking for reversals. So, what is kind of something that you look for through your experience trading Bitcoin, trading stocks, equities, that you kind of look for at those reversal points, even when, you kind of have momentum indicators that are continuously saying that, we should continue the trend here rather than the alternative?
Well, momentum indicators can be tricky. Things can always go higher. Here is a bit of a divergence, but you don't know where divergence is going to end. So here the price is going higher. And you can see the CMF, which is one of my favorite tools for divergence. The momentum is taking it lower. And you don't know where this ends. This can go up and up and up forever, which is why my best metric for identifying a runaway trend is the MRI indicator. That's my favorite. Otherwise, I don't know. Things could always go higher. But as I look at this weekly chart, the only time here where I'm concerned is on this candle, because it has that red star. When it's running away, otherwise I'm going to keep holding it, okay? And if next week we get a green star candle, I'm going to say, hey, it's got another run for momentum in it. It's really hard to identify. This is also why you have these gloom and doomers that have spent their entire life talking about a 1929 style stock market crash is coming. You know these people, right? They are right once every 9 years where the stock market falls more than 25%. And then in the next few years, it recovers. And then they're back to screaming it's going to fall again, again, and again, and again. They're never right. They're like a broken clock. The stock market can go up and up and up and up. My long-term picture of the US stock market actually looks like this. This is my picture of the US stock market. Yes, I am eventually expecting an 85% crash of the US stock market. But that's because these companies are not going to be in the stock market anymore. They're going to leave. They're going to be gone. And if the US dollar goes into hyperinflation, then the valuation of these companies is done in the currency. So it's going to make it pump even more. I am expecting an ultimate crash, but not with this set of 500 companies. I'm expecting 40, 50% of these companies to say, we're not in the S&P 500 anymore. We're now going to be a token on the blockchain. Okay, I think that's the ultimate future if the United States loses its grip and control of the country and the world.
Tone, what do you think about the possibility that the the move that we're creating right now is more similar to essentially, so just let's rewind a little bit first. That the high that we put in 2021 for US equities is kind of resemblant to the one from the tech bubble back in 2000 to 2001, and the movement that we're seeing in price right now resembles a lot of what we saw from 2001 to 2008. That's kind of what I think is going on right now.
I don't think so. I don't really see it that way. I mean, the S&P 500 looks very different than the NASDAQ. This is where the two actually separate. So this was caused by unreasonable moves in the tech sector. And we had a 50% correction. This was the housing bubble because they kind of blew the housing bubble in order to make up for the tech sector. There was no inflation taking place just in houses. There wasn't that much inflation otherwise. To me, this is just a simple, a normal standard correction. It was a little bit longer, a little bit deeper, but we also did have a recession last year. I thought the economic environment last year was terrible. And we'll see what happens going forward. I don't see a big similarity here. I think people are a little more careful with their money. And I do think technology is going to drive profits in these companies way higher. I think AI is going to remove a lot of human labor. Look, the most expensive part of a company is the people that they hire to work there. And the people that these companies are hiring to work there are being replaced by technology. I think a lot of companies are about to be a lot more profitable than they were before, thanks to advancements in technology. And that would make their stock prices go up, way up.
Tone, one question for you. So let's just say hypothetically over like the next few years, the S&P 500 effectively doubles and it reaches your price target. It'd be more than doubling, actually. I don't know where the top of that goes to. Oh, 12,000. So it 3x's from here, give or take.
Let's go, dude.
So right now, I believe the S&P 500 is trading at cumulatively over a 20 times forward-looking PE multiple. Do you anticipate the appetite of market participants simply willing to pay a higher multiple of the cumulative earnings, or are you expecting earnings expansion dramatically over the next few years?
I'm expecting some earnings expansion over the next few years, but maybe not dramatically. Maybe not dramatically. But what I am expecting is people being scared of entering government bonds. And people have to put their money somewhere. People forget that the bond market is 10 times the size of the equity market. And while you may not like the fact that your stock is trading at like 20x earnings, it's still better than the government saying we're not going to pay back the government bond. At least a company makes something. At least a company can change direction. A company has some assets, even buildings they can sell for whatever reason. I just think that the speculation in potential of making money in stocks is going to make earnings projections completely irrelevant. I never cared about earnings projections. I mean, people buy Tesla not because of like earnings, it's because they think that in 10 years, every second car on the road is going to be a Tesla. And up to this point, they have been close to being right. Still, a lot of Teslas driving around and people still want them. So people will buy into it if they think there is prospects to the future of the company. Not a lot of people buying Disney right now, and not a lot of people are buying Bud right now, Anheuser-Busch, InBev, the company that owns them, right? Because they don't see a bright future in those companies because of the woke culture. But other companies, Twitter stock would probably be going through the roof right now, though maybe not. Twitter is now giving some of their advertising money back to the users of Twitter. So that would hurt their stock price. But when Twitter fired all of these useless employees, like that one lady was being paid $17 million to censor people. She got fired. That's a $17 million saving that also makes the company more attractive, right? So these are the kinds of moves that companies are going to be doing that will make investors more attractive. And people know, like, this is why I'm curious how Disney stock's doing. Hopefully terrible.
It was looking terrible, actually. I just tweeted kind of a funny chart about it, but
What is it? So,
Right.
so if the S&P gets to 12,000, what does that mean for the Nasdaq? Is it just this like huge Big Mac of an index where it's like 60,000, 70,000?
Probably. I'm still very bullish on on technology. Nasdaq has caught up like a bandit. Remember, Nasdaq fell the most. Nasdaq fell more than the S&P and the Dow, and now Nasdaq is probably closest to its all-time high, and it's probably past the all-time high the fastest. Where's the
I
Dow?
love it, man. So Tone, so your theory is essentially like David Hunter's melts up, but on a longer time frame, where instead of it, all this price action happening within the next 2 quarters, you're saying it pretty much over the next 2 election cycles, 2024 election cycle, 2028 election cycle. Am I
Yeah,
right on that?
and it's not going to be because the companies are so amazing. It's going to be because that is the safest place to put your money. Bitcoin will also be a great beneficiary, but people aren't ready to risk on Bitcoin, but they are ready to risk on Apple's and Google's and other companies that don't necessarily need America. They can be global. They have global clients, and people are going to trust their money in those companies more than they're going to trust their government than the money in government bonds, especially when that interest potentially creates a default on the U.S. government paying those bonds, or they're paying them in devalued money. You also have to realize that inflation helps the stock market, because if inflation rises 10% and you have to pay 10% more for your iPhone, Apple makes 10% more money.
Tone, is there anything in your mind that you could see kind of throwing a monkey wrench at your multi-year forecast for the equity indexes? Of course, I'm bullish right now. I'm not nearly as bullish as you over the next like 3 to 5 years. But I'm not like necessarily a doomer or anything. But I'm just curious, is there anything that you could see that would materially change your bias over the next couple of years? And what would that be?
Confiscation. Basically putting in a what would they call it? Taxing unrealized capital gains.
Yeah.
Removing capital removing capital gains tax, which is only like 20%, and making it straight up income tax on longer term investments in the stock market. Things like that. Raising taxes on corporations. Confiscation of your, like, the government treating investment accounts the way they treat your personal bank account. They can just come
So
and
like
take
basically
it.
predatory taxation across the board for individuals and corporations.
Yeah, taxation or confiscation, forcing a lot of the money managers and investors to not invest in stocks. Like right now, a lot of the money managers continue to invest in government bonds, and now the interest rate's higher, so now they're more interested in investing in government bonds because now they're earning 5%. But what happens when the government bond isn't being paid, and then the government prevents, let's say, pension funds of Ontario teachers or CalPERS, the California Teachers Fund, prevents them from buying stocks. So regulation that makes it harder for people to buy stocks, that would put a big wrench in my view.
So your theory here is that the U.S. government isn't going to pay out its debt and its bonds, correct?
Well, right. They're going to have to restructure somehow the debt, and people will lose confidence in the U.S. government, or they will have a monster devaluation event. Like of the currency, like I don't know what they're going to do. But if the interest rate stays about 5% for the next 5 years, the US government is screwed. They will not be able to afford the interest payment.
Yeah, for sure. That's why I'm a proponent that they're probably going to end up cutting sooner than they're going to want to let on, because they can't afford it, and they have the luxury now of just popping up these emergency credit facilities whenever they want. Whenever a bank fails, they can just pop up like the BTFP, and there you go. There's liquidity, and like they don't need to keep the interest rate as high.
Right, but here's the thing, right? Like, let's say they do that, right? Let's say they put in their own guy at the Fed to cut the interest rate, but the government still has to sell those bonds. The reason why they're actually able to sell bonds right now, with the stock market rallying like it is because these bonds are the new bonds that they're issuing are paying 5%. And the new bonds that they're issuing also make up for the old bonds that are expiring. So this is why the interest rate payment goes up, right? Because those 10-year-old bonds that were issued at 1% or less now have to be reissued at 5%. They're able to sell them. If they force the interest rate lower, but no one wants to buy government bonds that pay them 3% when the stock market is rallying 8 to 9% a year, how is the US government going to force companies to buy into these bonds, right? They have to now prevent these same people from voluntarily choosing to invest in the stock market that is earning 8, 9% versus a bond that's earning 2, 3%. Foreigners aren't buying them. Russia has zero risk to US federal debt. They completely got rid of that. China has lowered their exposure from, I think, 1.3 trillion down to 800 billion or something in exposure. I forgot the exact numbers. Foreigners aren't going to want to buy these bonds. It's too risky. So that's the problem. The problem with forcing the rate lower, like, for example, would you buy an Argentinian bond at 3%? No, you're going to want 20 or something like that, right? Because they always default on their bonds. So it's not going to be as easy to push the rate down if no one wants to buy your debt.
If we enter a deflationary period and perhaps the Fed is actually over tightened and we have, let's just say, 0% inflation or even negative, I imagine there'd be plenty of people that might consider buying a bond or some sort of note that's yielding 3% in that scenario.
That is correct. Yes, that is correct. So inflation would need to go away, and there would have to be like a different environment out on the streets. But yes, if inflation goes away and we do go back to a deflationary environment, then the government can easily get away with a 1 to 2% bond that they can issue. But there's one more factor. The people need to be scared of investing in the stock market. And who's going to be scared in investing in the stock market if it breaks to a new all-time high early next year?
Well, if we enter a deflationary environment, the other side of that is that deflation is terrible for risk assets, right? So if we enter a deflationary environment, I would see it difficult that equities would thrive without at least 2% inflation. I mean, it doesn't mean it's like an imminent collapse, but historically, deflation or decrease in the money supply is not bullish, right?
Yes and no. Again, we're scaling technology crazy well. And going back to the AI, right? In a deflationary environment, you don't have to raise salaries. Companies are getting leaner. They're getting leaner right now. Like, why is Google, Facebook, why are their stocks up? They got rid of their adult daycare centers of foosball tables and free lunches, right? They got rid of their overpriced employees that only worked half the day. And these employees went out and got another job at a non-tech company to improve the tech of a non-tech company. Like, every non-tech company is going to be utilizing the latest in AI tools. And these employees were hired by Google because they were qualified. They were just enjoying the adult daycare center. And now they're going to have to work as the lead tech person at a small company that ain't going to be doing that. So even in a world of slight deflation, there may not be that much of an issue for companies.
Yeah, and mainly for the stock market, it's only been a stock picker's market. If you haven't really if you haven't really gotten into the mega caps or AI stocks or blockchain mining stocks, then you haven't really done well, to be honest. Like you're still down from the highs if you bought at those highs, right? Like some of these tech stocks are still down astronomically, right? Even HUD 8, even though it's up like hundreds of percentages year to date, the stock went down like 99% and still has a ways to go. So it depends
So
on
so you got to be careful with that, right? Because in a way, Bitcoin miners do have a component of similar to shitcoins because of the halving, right? Like they cannot mine the same number of Bitcoin they mined in 2020, and the price of Bitcoin was at 60,000. The hash rate is higher. The environment's way more competitive. They are earning half as much Bitcoin as they did during their last bull market. Not to mention a second halving is a year away. So these mining companies breaking their 2021 highs is going to be almost impossible for them. It's going to be incredibly difficult. It is buying into miners is similar to buying into a shitcoin, but I think it's significantly safer, and I do think they have better probability of rising in the short term. But on a long-term time scale, I can't assume any single miner is going to break its 2021 top. Now, as some of these miners eventually go out of business, one miner can dominate, and its stock can go significantly higher. But I don't know which miner it would be. So we do have to be a little bit careful with these mining stocks.
And Tone, I want to expand on that a little bit. That's something that I've spent a good deal of my time focusing on as we are approaching the next Bitcoin halving in early Q2 of 2024. Is that right now the break-even cost to produce one Bitcoin is roughly 20 to 22,000 per Bitcoin. So right now miners are making a nice profit.
Whoa! How do you? I don't agree with that. I think it's still like down in the 15 range.
I mean I can I would have to, I guess, share my numbers with
I
you
think
for
some
like
miners are
kilowatt
doing
per hour.
incredibly well. I think some miners are doing incredibly well. But sure, we'll stick to that 20,000.
Okay, so let's just meet in the middle. Let's say it's 18 or 19, right? Let's
Okay.
just for the sake of the argument. So right now they're producing at a really nice they've got a really nice spread. Their margins are very juicy for the cost of
Yep.
producing one Bitcoin as a weighted average amongst the top mining
Yep.
companies. As the next Bitcoin halving approaches and obviously the block rewards get cut in half, the cost to produce effectively doubles, assuming that
Yes.
we don't have like a material breakthrough in efficiency or anything like that. So assuming similar conditions, the cost is going to effectively double as the block reward gets cut in half. How do you think that miners are going to prepare for the halving in next April if Bitcoin is not significantly above 35K at that time? Do they begin to flood the ask side of the books and raise some cash and hunker down, or do they just kind of hold on for dear life and hopefully Bitcoin recovers swiftly and they get well above their break-even cost?
Every miner will have their own strategy. Those that time the Bitcoin price market the best will have the longest chance of survival. I think we're in a bull market. I think right now the miners need to hold on to every single Satoshi they can. And they can help optimize by, selling call contracts, if you know options markets, selling futures contracts if they go into backwardation, where the futures price is higher than the spot price. And or is it contango? Sorry, I always get those two confused. But I know how to trade it. And I think that should be the strategy right now. And wait for that all-time high, and then deleverage and sell some of those Bitcoins. Eventually, all these big Bitcoin mining companies are going to go away. Eventually, I still think the mining industry, as these big conglomerate miners, I think they still have a 20-year shelf life. Maybe 20 years to go. Half of them won't make it. New ones could potentially pop up. And your view, if there is some kind of a mining efficiency, that's going to knock out many of these miners, right? Because if there is some kind of a mining efficiency, perhaps one or two of these miners will be on board with that and get on it early or develop it. or some new company is going to come along and they're going to knock these guys out with their mining efficiency. So a mining efficiency coming in actually replaces the current miners and creates a brand new company. And that brand new company would, of course, have its stock, if it's publicly traded, go to a new all-time high, its all-time high. But this mining industry, eventually the subsidy is going to end. So there needs to be sufficient fees for these companies to be profitable. And there's still lots of competition, new hash rates coming in. And again, I don't know where the future holds. Either way, Bitcoin mining is continuing to grow overall, and it's very diversified. I don't like the fact that the majority is in the United States now. I actually liked it when the majority of the mining was in China. I thought it helped decentralize the Bitcoin network by having most of the mining in China. But I have a different view on the decentralization than some other people do. But I think the current mining companies, those that are mining Bitcoin in that $20,000 range, will be just fine.
All right, cool. Guys, this has been an excellent discussion. Tone, great to have you on the show. We've been running for close to 2 hours now, man, and we've covered a lot of things. We covered stocks, we covered some commodities, as you showed with your oil charts. We covered crypto, and also we got your long-term outlook on Bitcoin and how stocks might be tokenized on a blockchain. So I want to thank you guys so much. If you're here from our Twitter audience, from your Discord audience, thank you all so much. If you're new to the channel, feel free to subscribe. Tone, thank you all so much, man. Looking forward to our next stream. Shout out to you, brother. Thank you for coming on the show for a second time and supporting a young startup, man. We appreciate you and your knowledge and your character. You definitely bring a vibe to these shows, man. And yeah, thank you all so much, and we'll see you on the next one. We'll be having our Twitter space tomorrow with Mark Lamb from OpenX at 4:15 p.m. Eastern time to talk all things markets. So thank you all so much. Thank you for supporting us. And Tone, before we wrap up, man, price predictions for the end of the year, brother, for Bitcoin. What's going on, man? What are you thinking?
I think we'll be in the $40,000 range, plus minus $3,000. I think we'll be in the upper 30s, low 40s, going into end of year. I think a high will be made before that. So we'll pop above 40 and then pull back into the halving, maybe pull some more after the halving. And if you are lucky, you may get a chance to buy a sub $35,000 Bitcoin after the halving for a split second before the real bull begins.
All right. That wraps it up, guys. Thank you all so much. Take care, and God bless you all.
Bye, guys.